Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 11th, 2024, and we're diving into the latest earnings report from Oxford, the owner of well-known brands like Tommy Bahama, Lilly Pulitzer, and Johnny Was. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Oxford's third quarter results are quite intriguing, especially given the challenges they faced this quarter. I'm looking forward to breaking down the numbers and discussing the company's outlook.
Revenue and profitability overview. Let's start with the top line. Oxford reported net sales of $308 million for the third quarter of fiscal 2024, which is a 5.7% decrease compared to the same period last year. John, can you elaborate on the factors contributing to this decline?
Certainly. The decrease in net sales is primarily due to a challenging consumer environment, exacerbated by high inflation and significant weather disruptions in their key market, the southeastern United States. These factors led to a loss of approximately $4 million in sales. Additionally, the competitive and promotional retail environment further pressured their sales figures.
And what about their profitability?
On a GAAP basis, Oxford reported a loss per share of 25 cents, while the adjusted loss per share was $0.11. This is a significant drop from the $1.01 earnings per share they reported in the same quarter last year. The decline in profitability is largely due to decreased sales and increased SG&A expenses as the company continues to invest in its business.
Segment performance and margins. John, let's delve into the performance of Oxford's key segments. How did Tommy Bahama, Lilly Pulitzer, and Johnny Was fare this quarter?
Tommy Bahama, Oxford's largest segment, saw a 5.2% decline in sales to $161.3 million. Lilly Pulitzer's sales dropped by 8.5% to $69.8 million, and Johnny Was experienced a 6.1% decrease to $46.1 million. Despite these declines, the gross margin slightly improved to 63.1% from 62.9% last year, thanks to lower LIFO accounting charges and reduced discounts at Lilly Pulitzer.
That's interesting. So despite the sales drop, they managed to maintain their margins?
Yes, but it's important to note that the adjusted gross margin actually decreased to 63.0% from 64.0% last year. This reflects the impact of a higher proportion of sales occurring during promotional and clearance events, which typically have lower margins.
Operational efficiencies and future outlook. Let's talk about operational efficiencies and the future outlook. Oxford's SG&A expenses increased to $205 million. What drove this increase, and how is the company planning to manage these costs moving forward?
The increase in SG&A expenses is primarily due to the opening of 33 new stores, including 4 Tommy Bahama Marlin bars, and pre-opening expenses for additional stores planned for the fourth quarter. Despite these higher costs, Oxford is confident in its business model and expects to drive profitable growth. They have revised their fiscal 2024 sales guidance to a range of $1.50 billion to $1.52 billion and adjusted EPS guidance to $6.50 to $6.70.
That's a significant revision. What are the key factors influencing this outlook?
The revised guidance reflects the anticipated impact of the hurricanes and the weaker-than-expected consumer environment before the elections. However, Oxford is optimistic about the holiday season and believes that their recent product introductions and marketing campaigns will drive improved sales trends.
CEO's perspective and strategic initiatives. John, what insights did CEO Tom Chubb provide regarding the company's performance and strategic direction?
Tom Chubb acknowledged the challenges faced during the third quarter, but expressed optimism about the start of the holiday season. He highlighted that consumers have responded positively to new product introductions and marketing efforts, which have improved comp store trends. Chubb remains confident in Oxford's business model to drive long-term shareholder value, emphasizing the importance of their exceptional team in achieving these goals.
It sounds like Oxford is focusing heavily on strategic initiatives to navigate these challenges.
Absolutely. The company is investing in new store openings, enhancing their e-commerce and omni-channel capabilities, and leveraging data analytics to better understand consumer behavior. These initiatives are crucial for sustaining growth and adapting to the evolving retail landscape.
Key takeaways. As we wrap up, let's summarize Oxford's performance and investment prospects. Despite a challenging quarter, the company is optimistic about the holiday season and has set a clear path for future growth. John, any final thoughts?
Oxford's ability to maintain a strong gross margin amidst declining sales is commendable. Their strategic focus on product innovation and marketing, coupled with investments in new stores and technology, positions them well for long-term growth. However, investors should remain cautious of the near-term challenges, particularly the impact of external factors like weather disruptions.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Oxford's performance in the comments below. Until next time.